it has distribution across the globe, it has recognition, it is mainstream. They're selling it to my grandmother now.
Institutions already control most of the Bitcoin by then. So what's the point of OpCat, right?
One point to add is let's all remind ourselves that liquidity is king in DeFi.
Do I retain custody over my coins even when my Bitcoin is deposited into a DeFi protocol?
We are very, very, very close to entering a geopolitical Bitcoin race. Welcome back to the Rollup, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners.
Redstone is DeFi's modular oracle, supporting over 100 clients on over 50 chains and offering 1,000 assets. Redstone is the leader for Bitcoin staking and yield-bearing assets. They offer the most robust, customizable price feeds available in any model. Join the Redstone exhibition today.
What's going on, guys? Welcome back to the Rollup. Today we have an episode on the future of Bitcoin, the largest crypto asset, the asset in many minds of new high net worth individuals, family offices, institutions, and more. It is our job to convince them that we need to scale Bitcoin and create an everlasting ecosystem outside of just what many people consider a well-designed L1 chain or L1 base layer. So we'll hear the opinions and thoughts of Alexei, Yovela, and Jacob today. Welcome on, guys. Alexei, Yovela, first time on, and Jacob, of course. Welcome in.
Guys, maybe we can start Yovela and Alexei with a little bit of an intro, since it is your first time, and then we'll hear from Jacob on the way his ZK brain looks at Bitcoin. But Yovela, would you like to introduce yourself?
Yeah, so I briefly introduce myself. Hello, everyone. I'm Yovela, and I'm the co-founder of Fiamma. So we are quite known for our BitVM development. So far, we are building two infrastructures, including Fiamma Bridge, a BitVM bridge, and also Fiamma layer, a ZK verification layer that implement BitVM 2. So these two will be the foundational infrastructure to further scale Bitcoin and enable Bitcoin to interoperate in trust minimized manner with all the other ecosystems. Yeah, that's pretty much.
I guess I go next. So everyone, I'm Alexei. I'm the co-founder of Bob. Been in the space for 10 years now, which is quite scary. So I got into Bitcoin research during my studies and did a bit of a random walk from merge mining to payment channels, and then really got hooked on sidechains, bridges, and spent a lot of time trying to build trust minimized Bitcoin and general cross-chain bridges. Naturally got very, very excited when Robin came up with the concept of BitVM and started working with him and others on how to build a trust minimized Bitcoin bridge using BitVM, and co-author the BitVM 2 paper that is now essentially the standard that is kind of being built upon and researched upon by the researchers. And at Bob, we're building a layer 2 that's a hybrid that is not only a Bitcoin layer 2, but is also connecting to other ecosystems, aiming to leverage both Bitcoin security, but also the versatility and the innovation and the network effects that we see on the likes of Ethereum, and in the future also perhaps Solana and other ecosystems.
Awesome. And Jacob, quick intro from the cabin. How are you, man?
Good, man. Good, man. And quick reminder, I'm Jacob. I work at Risio right now. And I think we're most well known for inventing the RIS5 ZKVM, but currently I'm helping lead the project Boundless, which is really meant to take us to the next generation of ZK. So not only write, in a high level language and get ZKPs, but write in a high level language and deploy production ready ZK applications. And we're super excited about Bitcoin this year. Getting to work with teams like Fiamma and Bob has been really great in bringing this programmability that we know from smart contract platforms to the world's largest crypto asset.
That's right. And I kind of started this with the design philosophy of Bitcoin, which I think truly embarks on this vision and mission of being purpose built. And we continue to harp on this every single podcast, it feels like, where we are extremely excited about purpose-built chains in the future. And we can talk about Bob and kind of like how you see your niche. But Bitcoin was kind of like this OG purpose-built chain. It's very clearly not trying to do anything else other than just be very secure, be meant for payments, and now it's kind of grown into like this purpose-built chain for store of value for BTC, the asset. And since then, we've kind of progressed into the Ethereum land, into smart contracts, and all the way forward into where we are today. Skipping a lot of steps there. But what I'd like to aim to do to lay the foundation for this technical conversation is to understand a bit about the why before we get into the how. And so, Alexei, you mentioned that you've been in the space for some time, and I actually remember our panel together. I think it was last year, sometime in the summer, where you kind of laid out the why for this entire movement, for build on Bitcoin, for scaling Bitcoin. So maybe you could help us speed run through kind of why you believe that this is such an important mission for the Bitcoin community, and why this is something that you're basically dedicating your entire early career to.
Absolutely. I mean, why do we spend so much time on Bitcoin? Bitcoin is the largest, most decentralized digital asset. It's the most secure network that we have. It's basically the fundamental system that backs the entire crypto industry. Everything else is built on top of Bitcoin. Even if, from time to time people will go claim that, oh, something else is going to replace Bitcoin, we're very far from this ever happening. I like to draw a comparison here between apples, the logo of Apple, and when you see the Bitcoin orange bee, it has a similar status at this point. And Apple spent billions of dollars to reach that level of recognition, and just everybody knows Bitcoin. When media talks about the crypto world, it's Bitcoin. Prices changes are happening, it's Bitcoin, right? And the issue that I've always had with Bitcoin in its current state is that, look, we were started to offer an alternative to the financial system. But if you want to do anything else with Bitcoin than payments, you have to go to a centralized provider. You have to go to a centralized exchange. And as DeFi emerged on Ethereum, Solana, and all these other ecosystems, Bitcoin stayed behind. And so everybody who wanted to embrace crypto had to leave. And that is very controversial, is it not? And so as we now embark on this new era, in my opinion, for Bitcoin, we call it the Bitcoin Renaissance, and we are coming out of the dark ages, right? Ever since the block size wars, people were very, I guess, traumatized about talk about changes, and new ideas were shunned. I would get uninvited from conferences, like some of the more Bitcoin cult-based conferences, because I talked about let's bridge Bitcoin to other ecosystems. But now, ever since Taproot was introduced, the third fork to Bitcoin that was supposed to fix Lightning, and it kind of backfired because it enabled all sorts of new things that are not accounted for, starting with ordinals and ultimately culminating in BitVM. We actually have the blueprint to go and create better ways to use Bitcoin and DeFi. For the first time ever, we can create a system that allows us to bridge Bitcoin or deposit Bitcoin into systems in a trust minimized manner, where you actually can argue that, yes, it is safe, it fits and matches the ethos of Bitcoin. And it is, I think, not just about the tech in this case. We also need to think about what can we build and how do we actually make sure that builders can onboard and build on Bitcoin. Again, how do we make Bitcoin the place for builders when they start new projects in this space? Because right now, it was Ethereum. Up until 6 months ago, it was always Ethereum, right? Every new startup would go to ETH, specifically on the application layer. Now we have Solana challenging Ethereum, which creates this interesting dynamic where Bitcoin has the chance to come in and say, look, yes, in DeFi, Ethereum is leading, in meme coin, Solana is leading. But what does Bitcoin have? Bitcoin has 100, 200, 300 million, depending how you count, plus users. It has distribution across the globe. It has recognition. It is mainstream. They're selling it to my grandmother now. And the one thing I'll end kind of this monologue here on is, why do we need DeFi? Why do we need BitVM? Because BitVM allows us to create Bitcoin DeFi. So why do we need Bitcoin DeFi? Well, look, yes, it's great that we're getting the ETF, but are we not simply plugging Bitcoin into the old financial system? And if at the end of the day, 10 years in the future, to use Bitcoin, you have to go to your bank and ask them for permission. Is it still really Bitcoin? And I argue no. And DeFi and BitVM are right now key components to enabling us to fulfill Bitcoin's vision and to allow people to transact, but not only for payments, but to actually build an alternative financial system in a way that is permissionless, neutral, and accessible. And that's why this conversation is so important.
Appreciate that. Then Yovela, kind of building on that, with the understanding that you're building a BitVM bridge here, right now, only about 1.5% of Bitcoin's market cap is used at all in DeFi. And some of that is actually used in wrap Bitcoin on Ethereum or Coinbase Bitcoin, right? Which I think Alexei may argue is not exactly what his endgame vision is. So I'm curious, what are the core barriers preventing broader Bitcoin adoption using DeFi? And then how significant are bridge security risks in these barriers and in these adoption hurdles?
So I think that definitely the security risk is a big, concern for a lot of Bitcoin holders, because you can, for most people who hold Bitcoin, they have maybe the amount, relatively speaking, would be more than meme coins, right? So that they will be extra careful with the money. So most people would just put in cold storage or just centralized exchange. But the thing is that there are like a lot of yield opportunities out there in different ecosystem, and people want that yield opportunities. And now the only way to get to those yield opportunities is through very risky centralized pathways. So which means that when you try to bridge Bitcoin to Ethereum or other ecosystem, you have to basically give your Bitcoin to other people and trust that they will not steal it. Then I mean, if you trust the company who hold custody of your Bitcoin, then that's fine. But for a lot of people who are holding crypto, like a lot of, especially Bitcoin holders, I don't think that they would think that's okay. So that's a big reason why a lot of people are just doing nothing with their Bitcoin. Yeah. And then also for a lot of like like the people who are not like Bitcoin wealth, they're putting it, at exchange, and I think that that's also not like the most secure method. So and then it's very hard for them to generate any yield opportunities. But however, we know that Bitcoin is one of the most, or we can say the most valuable crypto, and also it's one of the most valuable asset in the world among various asset classes. So you, it's like it's well known for like being like a store of value. Then you can actually, mean stable coins, out of it. You can lend it to others to earn interest. You can do a lot of like strategy around it, right? To increase your wealth basically, and also can kind of defend yourself from the inflation. So there are a lot of things that we can do around Bitcoin, but now the limit is like the bottleneck is just like the lack of the trust minimized pathway. So that's why we Fiamma are very focusing on developing the BitVM technology, and also helping Bob to build a BitVM bridge, and also Babylon, and also other ecosystems as well, so that all the Bitcoin holders can earn yield in the most secure and trustless manner, and then all the other ecosystem can get the I think it's the greatest liquidity that they can. Yeah.
Yeah. And a couple of things here on the why and on the speculative side, and then I'll let Rob take us into the technicals. First is the ETFs are quite a bit of a paradox, where it's great that we have the BTC ETFs. Like, yes, come on, allow access to mom and pop, to everyday people to come and purchase Bitcoin and preserve their wealth and have an inflation hedge and all the things that you just mentioned, Yovela, as well as you, Alexei. However, it is also a paradox because we are just putting the coins, the percentages of our network that we value into the hands of large institutions. And so it's quite a bit of a paradox. Second thing is we are very, very, very close to entering a geopolitical Bitcoin race. We are within, I think, 6 months to a year from it could be Austria, it could be Hong Kong, it could be the States, it could be Canada, Switzerland, Ukraine, Russia, Brazil, South Africa. Somebody's going to come out and say, hey guys, we're allocating 500 billion, million, whatever the number is to our strategic reserve. And then it's going to happen again and again and again. And so while again, that's also a paradox that we want these things to occur. We want nation state adoption in the same way that nation states hoard gold. But it really feels like this entire concept that we're talking about today is coming at a very, very crucial time in history where there's kind of a divergence in the paths of the way that the Bitcoin network will be owned in the future and how you can use your coins. So 2 points that I wanted to add in there. If you guys have anything else to kind of chime in on this why side or any thoughts on those points, otherwise we can jump into some of the tech.
I just had one point to add is let's all remind ourselves that liquidity is king in DeFi. And currently 60% of it just lies on Bitcoin. I think, Andy, you stated a number like 1% to 2% is actually used to bridge to these centralized exchanges. And I truly believe that, with a truly trustless bridge coming from Bitcoin, where people from Bitcoin actually, that meets their security requirements very understandably, it sort of not only launches the Bitcoin renaissance, but can take DeFi to a whole nother level, regardless of what ecosystem you're on. With liquidity, you get tighter spreads. Tighter spreads provide better user experience. More people will come and use it. I think currently, on any given day, if you're trying to trade Bitcoin, you might find a better spread or deal on a centralized exchange. But once we can finally untap that liquidity, it could just make DeFi a better trading venue for everyone.
Yeah, you don't just have to care about the ethos. It's no, this is a better spot to trade, obviously.
I think one thing I'd add here, and this is again more of a personal wish and mission, is that what we really want to achieve in the future, I mean, that's what we all should be aiming for, is that the amount of Bitcoin that is in ETFs is lower than the amount of Bitcoin that is in DeFi and L2s, or vice versa. There should be more Bitcoin used in DeFi than sitting in custodial services in ETFs. And I think that is the ultimate goal. If we achieve that, then we win. If we fail, then we're back on the track of, well, is Bitcoin going to be Bitcoin in 10 years where it is fully dominated by institutions and banks? And if they position themselves as the main way for retail users to access Bitcoin, then I'd say we've lost. And then Bitcoin will lose its core values.
Yeah, definitely agree.
Also, if you can meet the security requirements of these banks and super large institutions with truly permissionless systems, I think they'll also be interested in taking that big tranche of money they've invested into Bitcoin and putting it in DeFi for additional yield opportunities.
Yes, so if it's permissionless and trust minimized, right, then and with great yield opportunities, I believe they would be interested.
Okay, so on that point, Yovela, maybe you can take us through the brief history speedrun of BitVM, kind of starting with Robin's paper all the way to where we are now, and then let's address some of the core challenges and speak on what you guys are building with Fiamma. And I'm sure the other two guys are going to have a lot to say as well. So feel free to get your piece out because I know when these guys start talking technicals, it'll go. Let's go.
Yeah, so I will start. So basically, I think a lot of people will understand a bit of history. So that the BitVM concept was raised in Robin Linus' paper issued in 2023, and then BitVM. There's a write-up about BitVM 2 that came out in around April 2024. And so the key difference is that in BitVM 2, we would use ZK proof to kind of prove or represent a lot of complicated computations, so that we only need Bitcoin to verify the ZK proof optimistically when there's like a challenge. So that's how we can make it more practical and more efficient. So that's like a pretty high level overview of the BitVM. And then specifically what we're doing, I can also talk a little bit about the history of like Fiamma. So we actually, we have a ZK expert on our team, Simon, so who have like 7 years of experience in building like ZK VM and ZK related stuff. So actually, when he read, the BitVM paper, the first version in 2023, then he just thought about that. What if we can combine it with ZK technology, right? It can solve a lot of issues. And then in 2024, then Robin Robin just come up with this great idea, and then he just became even more excited, because finally, because he's been building ZK for so long, and then you can imagine that ZK, we believe that Bitcoin could be the paradise for ZK. So that's like a great thing. So we have discussion around it. So when I first heard about it, I just believe that it's like a 0 to 1 breakthrough for the entire Bitcoin ecosystem and also the entire crypto, because a lot of the limit in Bitcoin. So why Bitcoin is idle, and then why we have like Ethereum, Solana, a lot of ecosystem, is because of the limited programmability on Bitcoin. But with BitVM, so basically we can, for instance, just take the bridge as an example. You can basically use a ZK proof to represent, like the burn transaction and execution validity on Ethereum or Bob or any ecosystem. And then you can let Bitcoin to verify it, right, when there's a challenge. So this is like an optimistic model, just because Bitcoin is expensive and also like slower. So that there's a way that you can enable Bitcoin to make a judgment. So that's why the whole BitVM thing make Bitcoin more expressive. So it's kind of like open a door for the future of Bitcoin. So we've been working very hard on first writing the ZK verifiers in Bitcoin script. So in the first version, it's actually pretty large. It's around like 7 gigabytes for both Flonk and Gross16, so which are two common like verifiers. And then the second step is that definitely we have to optimize the entire script so that it can be smaller. So now for the Gross16, it's slightly over 1 gigabytes, and Flonk it's 0.8 gigabytes, but we still need to definitely do further optimization. And also here we also need like a critical step, which is called fragmentation. So we need to fragment those, for instance, 1 gigabytes or 0.8 gigabytes script into around 1,000 or a couple hundred chunks, so that Bitcoin can be able to execute it within its 4 megabytes block. So we can for instance, when the bridge operator act maliciously, so we only need one honest challenger to identify this issue and initiate the challenge, so that the Bitcoin can verify only one specific chunk of the entire script, which could be like around, so far it will be around like 900 kilobytes or something, so that it's doable. But so far this size is still larger than the typical transaction. So that's why we're actually upgrading the protocol to allow so there are like, I think Alexei maybe can go over like the more, because I've already talked too much. So basically there are like three key transactions here. The second one is a third transaction. The second one is a third transaction, so which means that the operator need to post all the input and output data of those verifier chunk on Bitcoin, so that Bitcoin can find people can find an issue, and raise a challenge, right? For that, we would need to. So that would be a super big transaction, which would be around 4 megabytes. So we would, split it up so that Bitcoin can actually execute it smoothly without us needing to work with miner.
Yeah, I guess to add on to this, that's, I think, a very good explanation. I think the way I try to visualize this is like, so there's one thing that I think many people don't know is that in Bitcoin script, you can actually write universal programs, right? It is capable of doing that. The problem is that these programs become very, very large. And I'm really oversimplifying here. So please, like Yovela, Jacob, don't kind of tear me apart for like really oversimplifying this here. But the idea is that, think of it this way, right? You have like, on Ethereum, you have things like, if you want to multiply two numbers, you just like A times B. That's it. You just call the multiply function. It's available. It's a higher order programming language. It's just there. Like another familiar concept for like Ethereum developers is like precompiles, right? So you have like precompiles, which are smart contracts that you just can call into. Now, Bitcoin has very little of that. So you have to really use bare-bone tools. Like think of like logical gates, and I'm exaggerating, but it's kind of that, to build your multiplication function each time for each contract. And that means that these things blow up in size. So as a result, when Yovela was saying, right, the initial verify were like 7 gigabytes, and now I think it's like much, much small. I think it's a gigabyte if I recall correctly, or maybe even below. It's so big because it's written in script. And the problem is that it doesn't fit into a block, right? And just to kind of also bring in the whole debate about OPCAT, like that's where OPCAT and BitVM kind of, that's the two directions we kind of currently see in the Bitcoin community. With OPCAT, the idea is, and like other covenants, let's add more functionality so we can use more functions when writing the verifier, so it just becomes smaller. So you're effectively reducing the lines of code. Again, oversimplified. And BitVM says, well, let's chunk it up into smaller sizes, but as Yovela explained, so that each of these could be executed in a block. And the idea is, again, visualizing multiplication, right? And so in ignoring that, the actual program is a snark verifier, let's assume it's a multiplication. So you're multiplying two numbers. Now, when we actually put this into BitVM and chunk it up, you think of it again as now your multiplication is many, many, many additions. So if you're multiplying 2 times 10, you're actually adding 2 plus 2 plus 2 plus 2. And then when the operator commits to the program, they commit to this whole program, right? So it's the same chunked up as the original, same result. If you run them all one after the other, you get the same result. Now, if I'm the operator and I misbehaved, I claiming that 2 times 10 is 19, everybody will see, well, that's wrong, right? And then Yovela will challenge me, or anyone, and I'll be forced to reveal the intermediary steps. So the results like 0, 2, 4, 6, 7, which is clearly wrong. And then it goes 9, 10, and 9, 11, and so on. Now, everybody will see that, wait a second, that step here is wrong. So that must be where Alexei modified his program, because we know he committed to this program. We know what it looks like. And that's, again, as Yovela explained, that's where this trick comes in, where you would say, well, let's run this 1 4 megabyte chunk and show that Alexei is lying, because we can prove, like in Bitcoin script, that part is where his commitment is not wrong, and that's where the bit commitments come in Lamport signature specifically, and that's essentially the magic behind it. So it's a very simple concept, and basically how fraud proofs work on Ethereum, but hacked into Bitcoin script, and that's what makes it hacky, but also actually quite brilliant.
Awesome. That is a super helpful explanation, because as we were kind of unpacking this, I was thinking to myself, like I remember back in 2017 when we had SegWit, right? And the size of a Bitcoin. First, we had the block size debate, and people wanted it all the way up to a gigabyte size blocks, or 8 megabyte blocks is where the big blockers ended up, and then the small blockers wanted to just keep everything the same. Ultimately, we kind of went through that at hard fork in 2016. Bitcoin Cash became the thing. Ultimately, we compromised. And so to kind of like trace through the history of Bitcoin a little bit for the audience, Bitcoin started out with one megabyte blocks in kind of like modern era. Then block size debate, we ended up compromising with SegWit in 2017, which increased the potential size of a Bitcoin block to 4 megabytes. And that was a lot bigger than 1 megabyte, but it still couldn't encapsulate this script that could verify ZK proof. Because like Yovela said, these verifiers are like a gigabyte in size because you have to trace through all of these like extraneous pieces of logic. You can't just multiply 2 times 5. You need to go 2 plus 2 plus 2 5 times. And that takes up a lot of space. And so what, Alexei, what you kind of illustrated is very helpful, because what it says is that we can kind of scrap away all of the extraneous pieces, and we can focus on just the one part where there was a mistake or a malicious intent that was implemented, where 2 plus 2 equaled 5 and not 4. We can kind of scrape away all the other plus 2s and reduce the size of this verification to just that one particular piece. And that ultimately, by scrapping all of the extraneous parts away, we can focus on a part that is small enough to fit in a Bitcoin block. And so this is how we're able to verify challenges in the optimistic BitVM, right? And so we don't need to go into a full OP cat in order to arrive at some cryptographic security. We can combine crypto economic security in this optimistic path with the challenge piece being a ZK proof.
No, I'm just echoing back to what you said and what Alexei said earlier. Like, well, for OpCat, I mean, definitely it can make Bitcoin more expressive and makes things easier. But the thing is that we cannot really wait, right? We don't know when this would be activated, but we have to, fight for our DeFi world and fight for the decentralized ethos of Bitcoin. So what if the institutions already control most of the Bitcoin by then? So what's the point of OpCat, right?
No, it's Trump. It's Trump who's controlling it. It's not just the institutions, Yovela.
Oh yeah.
It can get worse. I would argue nation state leaders could be quite worse than institutions.
Yeah, institutions include Trump.
And so I think the US government, or maybe MicroStrategy at this point, is one of the biggest holders of Bitcoin. But they haven't really used that centralization power to any detriment. Like, I think we can imagine a world where if America did follow through with their Bitcoin strategic reserve, yeah, great. They're buying a bunch of Bitcoin, putting a bunch of money into it, price goes up, people are happy. But that poses a centralization risk to the entire Bitcoin economy, where they could then maybe not even take 51% of the network, but they could implement this strategic reserve in such a way that would demonstrate control over the network, potentially blacklist people or users' addresses, foreign actors from participating in this economy, and take away the credible neutrality. So there's a lot of potentially counterintuitive or counterproductive aspects to this strategic reserve. Now, even in that case, if there was like some centralization that was in effect, how does like extending this into a DeFi world on Bitcoin rollups take place? Like, I guess to boil down this question a little bit more, if I'm bridging to a Bitcoin rollup and depositing into some, Bitcoin DeFi protocol, is it then like not my keys, not my coins? Like, am I kind of giving up the custody of my Bitcoin such that someone else can kind of, go and do something with it? Or is that not the case? Do I retain custody over my coins even when my Bitcoin is deposited into a DeFi protocol? Because right now that's not happening, right? On DeFi on Ethereum, wrap Bitcoin, CB Bitcoin, I literally, my Bitcoin is just some paper representation held by Coinbase. Imagine if the world's GDP moved on chain. Guys, say GM to SafeNet. The newest protocol by Safe isn't a blockchain, and it's not a new layer 2. It's a transaction processing network built to send money anywhere and swap anything on thousands of layer 2s from a single universal balance in sub 500 milliseconds. It's fast, it's smooth, and it's simple. And it's built with safe multi-sig level security in mind. SafeNet unlocks smart accounts across multiple chains, allowing users to supercharge security, scalability, and speed. So get started today at net.safe.com. safe.global, and remember to follow @safe on X.
I think we have to be transparent here, right? And I think, like, I read a Twitter post where, you know, we should not be using the word bridge because it's misleading and new users are confused, because ultimately bridging is the same thing. So bridging from Bitcoin into ETH, Bitcoin into Bob, no matter what you use, is the same process as depositing Bitcoin into an exchange. The only difference, or the big question of bridging, is actually who has control over the Bitcoin while I'm using it, and how do I get it back, and how do I make sure that I or whoever bought the wrapped Bitcoin can actually withdraw. And you're right, with wrapped BTC, CBTC, you're trusting a third-party provider. Now, BitVM doesn't completely solve that problem, right? It's impossible to solve. In fact, I spent my PhD trying to solve that, and the result was quite sad. We proved that it's impossible. So kind of disappointing, but at least it gives us like the basis. Okay, there will always be someone that you have to trust. In the case of BitVM, we have operators. You know, the BTC goes into this deposit, this instance of BitVM, and the trust assumptions that we get in BitVM are that one of these operators will be online, and that there's someone in the network that will be online, and if the operator that is currently active and, you know, trying to steal money, if they misbehave, that they will be challenged, and that someone in the Bitcoin network, which could be you, me, anyone, will perform that challenge. So it's this existential honesty assumption, but that's what all bridges have. But this is as good as it can get, right? Even with like ZK, like fraud proofs are of course slightly worse than ZK proofs, but at the end of the day, you still need someone in the ZK-based system to submit the proof. So you always have someone somewhere that needs to take action, just because smart contracts are reactive. So that the contract has to react to you giving it an input. And with BitVM, you still have custody, right? BitVM at its core, the bridge, is just a way to securely custody Bitcoin under certain conditions. And the cool thing with BitVM that we do is we build in these conditions into the logic of actually BitVM. So we can enforce more conditions that are validated by all Bitcoin full nodes, in our case, if there's a fraud proof. And these conditions are, okay, Alexei was burning wrap BTC to withdraw it to Bitcoin. He should be the one who gets the Bitcoin. And that's what BitVM enforces, under this assumption that, well, somebody will really have to challenge. And this is a big distinction to multi-sigs, whether it's BitGo, CBBTC, or TBTC v2, which is a big open multi-sig where, you know, you have rotating signers. All of these systems today have this honest majority assumption. If the majority decides to steal your Bitcoin, is gone. Whether it's 3 out of 5, 10 out of 15, doesn't matter. With BitVM, the trust assumptions are quite different. Let's say you have 50 operators. Even if all of them collude, they cannot steal as long as there's someone in the network that is online to make a challenge. But the worst case that can happen is that all of them collude and they all get kicked out and your Bitcoin is frozen. So that is still a bad scenario, but in game theoretical sense, there is no incentive for all these operators to collude, because if you start, like, you know, they have this Bitcoin, or like the prisoner's dilemma, like or Bitcoin in general's problem, basically. If we start coordinating, I might get challenged if I'm telling you, oh, I'm gonna try to steal this, and you're like, ha, sure, I'm gonna help you, and then you challenge me the next second, you kick me out. So in BitVM, you need at least one honest operator on an operator for liveness to actually process the withdrawals eventually. But for safety of funds, any one person in the network is sufficient. And that's a very, very strong model. And it's a 0 to 1 step from multi-signatures to this new model. This is this existential honesty design. You still give up custody. That, however, must be clear. There is always risk involved if you're using Bitcoin somewhere else. But this allows us to really minimize it as much as we possibly can with the tools we have today. And that's the same level of trust you have when you're bridging ETH from ETH L1 to Arbitrum.
And then, Alexei, for Bob specifically, I would assume right now you guys are in your most centralized stage that you'll ever be. And that's for a good reason. But then in the future, you're obviously aiming to cater to Bitcoin holders, which means is your hand's going to be forced to decentralize things like your sequencer, your exit window, your data availability, those types of things where you're going to be I assume you'll be very proactive otherwise will suffer from people not wanting, your core target market won't want to really participate?
That is true. I mean, Bob is rolling out we're a hybrid L2, right? So we're slightly different to Bitcoin layer 2s. I'm sure there has been Bitcoin L2 teams on the podcast as well. The difference with Bob is that we envision to be connected to multiple networks. So yes, we inherit Bitcoin security, and we roll this out in 3 phases. In phase 1, we don't have it, right? With ETH Rollup today, as you said, most centralized state. We're very transparent about it. It's just what we can do today. We're working on adding ZK proofs, so we're actually going to be a ZK rollup on ETH because it fits nicely also with the BitVM design. But in phase 2, and that's what we're actually working on right now, we're adding Bitcoin finality through Bitcoin staking, and we're working with Babylon. We're currently the biggest Bitcoin secure network that's kind of using this Bitcoin stake, or will be using this Bitcoin staking security. And in our case, it adds a level of kind of validation on top of the sequencer. So the sequencer produces blocks, and then in an ETH rollup, you post the commitments, and then if you're not challenged, great. In our case, you first give the data, the states, to the Bitcoin stakers. They have to sign off, and only if the majority of the Bitcoin stake has signed off can we proceed to submit this to ETH. And on the Ethereum side, we modify the ETH L1 contract to not only look for, the commitments are there, there's no fraud proofs, but check if Bob has finalized on Bitcoin. Specifically, we look at Bitcoin where a transaction is posted, and after 100 blocks, we know this thing is final, and then we check the signatures of the stakers and their Bitcoin stake locked on Bitcoin. And only then we say, okay, we're good. Now, this happens within 18 hours, which is already much faster than the 7-day challenge window that you have on ETH L2s. So that's already quite a big improvement. And now you have essentially an ETH user who is bridging over to Bob. You're not only trusting that there will be eventually potentially be fraud proof, but you actually have a faster finality mechanism where you can trust that the Bitcoin stakers have signed off. And this Bitcoin staking mechanism we then use for the BitVM bridge, because BitVM works best for things that are built with Bitcoin. So things that we can check on Bitcoin, which in this case is that there's a commitment to Bitcoin where the stakers have locked their stake, and you can verify that just by looking at the Bitcoin blockchain. With Ethereum, if you want to run an ETH-like client in BitVM, that's much, much more difficult, and arguably with ETH-like client design currently not possible without additional trust, or not yet at least. So the cool thing is that BitVM works best with Bitcoin secured networks, and that's our phase 2, and that's where we're working with Fiamma and Babylon to roll this out. And I think that design is probably going to be the first to go to market, because in phase 3, that's what everybody else is also sprinting towards. Ultimately, we want the fraud proofs to be fully executed on Bitcoin. So just like Arbiter, but you have fraud proofs on Bitcoin. And the problem there is that if you really want to inherit maximum Bitcoin security, you have to continuously post the data. And Yovela is going to jump in and say, because I know Fiamma is working on solutions that actually offer a middle ground here that balances security and risk using Bitcoin staking and Bitcoin secure networks, as Bob will be and Fiamma will be, which is a cool kind of solution. But if you really want to go the maximum route of security and only have Bitcoin, then you have to post the data there. And that is very expensive. And there's a very good report by Alexei that just highlights that if multiple rollups are doing that, prices will explode. And let's be honest, yes, our target market are long-term Bitcoin holders, but will they pay 100 to 1,000 times more for fees than on Solana or Ethereum or Base? They will not. And that is, I think, the level of pragmatism that we need to have. And that's why Bob's phase 2 is rolling out now. And then hopefully we can get to phase 3. But then Fiamma is working on very cool solutions which kind of offer you middle grounds where you can get somewhere very close to phase 3, but still actually be efficient.
Alexei, I have maybe a dumb question around the settlement to multiple chains. Like, if you're using Bitcoin as a fast finality mechanism, and suppose the Bitcoin signer sign off on the transaction, everything looks good from the Bitcoin perspective, so it goes to ETH, and then on ETH they find something. They find something malicious, or right? But Bitcoin network has already finalized. It's already reached finality. What do you do with the ETH challenge once even after Bitcoin has reached finality?
I mean, realistically speaking, this is where this is like the weakness of this phase 2 design, right? So that's when we have this phase 3 step where we basically say, okay, it's Bitcoin. In our case, you have to basically balance who do you trust more and for what. For ERC20 deposits, things that affect Ethereum, I mean, you can start to bisect this, right, and to kind of look where's the issue, where it becomes quite difficult. I mean, in the ideal case, in the ideal scenario, you'll be able to say, look, if it's an ETH asset that came from Ethereum, okay, ETH has a final say. If it's related to the BitVM Bitcoin bridge, well, okay, then it's the stakers, because that's what the bridge is actually using. In practice, what will happen is that you'll have to either have a manual governance intervention, or you just say that, okay, one of these two mechanisms basically wins. But the thing is, for ETH fraud proofs, right? Who cares about the ETH fraud proofs? It's the users who deposited from Ethereum. So for them, having ETH as a final line of defense is important. For the Bitcoin holder, when you bridge in Bitcoin through BitVM, you trust the stakers. So for you, actually, even if there's a fraud proof, like the question is, are you being rolled back? And that is then, of course, a nasty thing. But to be fair, it's a very good question. But in all fairness, rollbacks, and if something happens with any fraud proof in Arbitrum or somewhere else, it's nasty. And then all of us will have to go through the same annoying and very, very nasty process of recovering from that, which is why it's so important to kind of decentralize sequences. But also, as you decentralize them, you actually incur a higher risk, I think, of this happening. So I am very scared, but also curious to see which L2 actually first gets a real fraud proof and how they handle it, because we don't have precedent.
Yovela or Jacob, anything to add there, guys?
Yeah, I mean, just connecting back to the BitVM bridge, right? So even though we use it's optimistic, like when there's a challenge, then we would let Bitcoin to do the verification, the complicated things. But for the user experience is actually quite good, because we have the operator who can pay the user in advance. So user only need to wait for like maybe 6 block confirmations. And if you can lower the security requirement for smaller amount, maybe shorter amount of time, maybe like 30 minutes to like an hours, so user can just get their funds back, right? So it's the operators who need to go through the challenge period, and then which is like 7 days to 14 days. But we are actually building like a quite active and a large like monitor node group, so that we can find the issue when right after it happened, so that which means that we can even shorten the challenge period for the operator. So actually we don't have that kind of user experience issue that a lot of optimistic rollup that on Ethereum that face.
Yep. Jacob, I got a ZK, maybe a couple of ZK questions, because optimistic rollups on Ethereum right now use some form of fraud proofs if they're decentralized and they reach a challenge in their optimistic settlement. But ZK rollups use validity proofs, right? So if we have a ZK rollup that is submitting proofs to Bitcoin and or Ethereum in this case, do we still need fraud proofs, or is the validity proof sufficient?
Yeah, my personal take is once ZK rollups become economically feasible, everyone will switch. They will provide a better user experience. Rollups will not be fragmented anymore. I guess a more precise thing would be once subslot proving is viable on your choice of settlement layer. So that's 10 minutes on a Bitcoin, it's 12 seconds on Ethereum. Once that becomes economically viable, you sort of get this asynchronous composability between all rollups, and a lot of the fragmentation starts to go away. And once that happens, I believe wallet providers will start to just blur all chains. Sort of how you sometimes already see, like when using like Phantom or Rabby between like Solana or Ethereum. For the time being, it's not economically feasible for some teams, and you can still reduce optimistic rollups cost a lot with ZK. We have this OP integration called Kailua, which allows like one-shot fraud proof mechanism. So instead of having to play this really long interactive game on Ethereum, which can cost north of tens of thousands of dollars. You just submit a single ZK proof that costs less than $15 to generate. And I think people are being really attractive to that right now. Additionally, I wanted to touch on Alexei made a really, he glossed over a really cool point, I think, that refers to ZK a little bit. Is traditionally in proof of stake networks and even in Bitcoin mining, you sort of have to have this assumption of an honest majority, or sometimes in proof of stake networks, it's like an honest third or honest 2/3. And with ZK, assuming we have no bugs in the proof system, we no longer have any worry of, you don't need any honest actors to maintain safety of our funds. And you only need one honest party to have liveness with your protocol. And that's really how we've designed Boundless from the ground up with those assumptions. Additionally, he made a really good point about incentivizing provers, which is something we've thought a long hard of. And I think a lot of people have sort of glossed over, is it's really critical to align the people generating the proofs and the people that need the proofs with the proper incentives and fees to be paid properly.
Could you elaborate a bit on that, Jacob, on that incentive design, what that looks like in Bob's example or in a Bitcoin L2 example?
Yeah, so a lot of the time these proofs require sophisticated hardware. You can do smaller proofs, like maybe for a single transaction locally on your laptop. Before, in general, a lot of the provers I'm working with Boundless are very sophisticated parties. Think the biggest Bitcoin miners, the biggest proof of stake network validators. We recently onboarded some provers to our network. They represent billions of dollars of mining and securing proof of stake networks every year. So how do you correctly reward them for their work? Additionally, how do you make sure as a protocol you're sort of collecting a fee to pay for those proofs? And that's exactly what we've done with Kailua, which I think is a little unique currently in this space. So making sure the money is there when you actually need it. And then we'll be talking more about how to reward provers proportionally to the work they've actually done in Boundless Q1 this year.
Awesome. Okay, guys, as we kind of come to a close, one more kind of existential question for all three of you guys. Should Bitcoin continue on the roadmap similar to Ethereum, of a Rollup-centric roadmap? Or should the Bitcoin community rally around a different scaling model? Why or why not?
Whoever answers the question first, the others won't be able to say much, I guess. There is no other option. What else is there? I mean, rollups, it doesn't matter if you call them rollups or validiums or sidechains. Ultimately, if we want to have, the deeper question here is, do you want DeFi? Do you want people to use Bitcoin in a secure way and not go to exchange? If the answer is yes, okay, there is no other option. We can add OPCAT. I know there's many teams exploring can we do L1 computation? It's 10 minutes block times. Bitcoin is not meant for it just doesn't scale. There's not enough throughput. You have ordinals clogging the network. Now imagine you're building a DEX on this. Imagine you put Uniswap on Bitcoin. Clog, dead. That's it. It doesn't work that way. So I think it's the only way. The question is whether, do we introduce a fork or do we not? That is much more open for debates. But do we build rollups?
Well, then how do we deal with the data availability, data publishing problem then? I know that you touched on it a bit, Alexei, but do we use Celestia, Avail, EigenDA? Do we use Ethereum blobs? Do we do something like ZK data compression maybe to enable us to post into Bitcoin, right? Because as you said, Alexei, practically speaking, it just doesn't make sense to post all of this to Bitcoin. So what's the solution there?
That's why we
Yovela has the answer, right?
Okay, sorry. This is the entire conversation we've been having. Yep, there it is.
That's why we build a settlement layer. So we will first verify, the ZK proof, and then we would store it. It could be on the settlement layer, or we could store it in another, Bitcoin secure network. But the key idea is that so for us, we really care about network security value, right? So that's why we implement BitVM2 also in the settlement layer. So which means that the validator, the nodes that of the settlement network, if they act maliciously, they could be slashed directly on Bitcoin. And this is all powered by BitVM2. Yeah, so that's how you can do it cheaply. Yeah.
I mean, look, at the end of the day, the whole data availability question is kind of a bit of a Fugazi thing, right? Because ultimately, if you post, like what you're doing is you introduce, like if you don't post it to the L1, right, you have to introduce another layer, another set of another committee, something where you post it. And that thing has to be honest. Now, ideally, in practice, that thing is independent of your sequencers. Okay, so that already in practice, that separation, if you have, because again, with DA, it doesn't have to be fast. It doesn't have to be super efficient. The sequencer needs to be fast. Sequencers are always better centralized or a small group rotating, but you pick like a slot and you operate. DA can be slow. You can have many people participating, so you can just distribute it much more, reducing the chance of corruption. And that this one L2 that is being attacked by someone also is being attacked by attacking, like that. You have an attack on both, which in Bitcoin is almost impossible. And what Yovela is suggesting is, well, basically you could use, like if you're using Bitcoin staking for Bob, let's say, as a finality kind of gadget, you could also post the data to another chain that is independent of Bob, maybe has much more signers, much more distributed network, where maybe it's not a sequencer and then, the finality providers sign off, but it's only the finality providers, many of them. And that's just a storage layer. And it has Bitcoin security, Bitcoin stake security. So it's kind of, the same level for Bob and that layer. So we're okay to post it there and it's cheaper. So that's, I think, a very cool idea. And whether you use Bitcoin staking or merge money, there's different designs, but it has to be cheap. And that's why I'm very excited for these kind of solutions, because like thinking practically, like I don't want our users to pay so many more fees. And I only think a fraction, like sure, a few big whales will care, but the majority of our users will not. And if you find solutions like this, you actually have a good middle ground. And ultimately, I think it's about being pragmatic.
So maybe Alexei is not as Bitcoin aligned as we once thought. Maybe he is. There's a reason why he was getting kicked out of these Bitcoin maxi clubs back in the day.
I mean, one thing to be said in my defense, right? If we grow to a size that we can afford to post the data, then we should do it, right? If you have so many users that the cost per user is a cent, fine. Then it makes sense. So it's a question of engineering, figuring out if we can compress the DA and make it more efficient, or maybe Bitcoin decides not to add OPCAT, but ephemeral storage where you temporarily just store some data on the nodes and you can access it from within script, which I really doubt. Or we're just so big that the cost doesn't matter anymore. But how many rollups can then be so big, right? That is again the question. But looking at Bitcoin's user size, I do think that midterm, long term, that this could be a viable option. But it won't be possible for everyone. And if we imagine a multi-rollup ecosystem where new projects launch their app chains, they won't be able to afford that.
I think Bitcoin is in a really, really nice spot right now. Ethereum just spent billions of dollars funding ZK research, going through many different iterations of rollup designs. I think we all remember like the opcode wars and the compatibility wars of like 2-3 years ago between different rollups. And we're really settling on a standard. Most people are trending towards full ZK rollups. On top of for ZK, we're seeing the mass adoption of the RISC-V ZKVM. I think one validation of this is the EF is now spending tens of millions of dollars to formally verify a RISC-V ZKVM, and it just provides us there's the beam chain as well, which I'm excited about. And it's just now you get to learn all those lessons. You get to learn all these things not to do with rollups, and you sort of just get this final product to now bring this just amazing opportunity to unlock that large amount of liquidity we talked about earlier.
Vitalik was originally a Bitcoin maxi, writing blogs for Bitcoin Magazine, right? And I think he got a lot of hate when he went and started Ethereum, but maybe this was in the back of his mind the whole time, was Bitcoin was able to now leapfrog forward because Ethereum provided a testing environment. So Ethereum's got a lot more going for it than just a testing environment for Bitcoin, but it's the
It's
best
the
of both
original
worlds.
L2.
It's a win-win.
Ethereum is the original Bitcoin L2, eh?
I want to add like another final thought here. So I believe that the whole Bitcoin ecosystem, that the landscape would be quite inclusive and diverse, creative, because in Ethereum ecosystem, like all the rollup naturally is EVM, right? But here in Bitcoin, you can have EVM, SVM, move EVM, or whatever, and the Alexei VM, right? So it doesn't really matter. So as long as you can get Bitcoin in the most trustless way to your network, and then get secured by the Bitcoin network.
Yeah, I have actually been going a bit at war with the Ethereum community recently. And I'm finding myself much more aligning back to the Bitcoin community. Ethereum is just all caught up in different ways of just different. There's just a lot of nuance in the discussion, but I think what you said matters, right? It's like, okay, what Alexei's harping on is just practicality, using the cheap solution, even if there's a trade-off on decentralization, right? We're already LARPing about sequencers on L2s, not just being bridges and multi-sigs, right? Like we're already kind of LARPing that L2s are safe. So we might as well just build an ecosystem that has very, very cheap fees and has a lot of performance, regardless of the execution environment, regardless of who you're using for DA and ZK at all. And just we have pieces of state floating around in the abyss. L1s and L2s are kind of whatever. And we just ZK proof them all. And we have a really high performing ecosystem with very little ideological tribalism outside of just the core ethos of crypto. And I know that we can't all agree on everything all the time, but it does feel like the Ethereum community is shooting themselves in the foot in some ways currently. So to be determined. It is the beautiful time will tell of all industries. Ladies and gentlemen watching the roll up today, probably mostly gentlemen. We have a lovely lady here with us today, though. So thank you so much, guys, for joining. Alexei, Jacob, Yovela, I'm glad that was funny to you. Yovela, thank you. And Robbie, of course.
Thanks, guys.
Bye.
Have a nice one.
y'all.
Bye-bye.